Hello students, today in this video we are going to understand master entries for interest on calls in arrears. In previous video we have seen what do you mean by arrear. So arrear money, just quickly I will recap for you. Arrear money is a money receivable from shareholders. Shareholders have not paid the call money as per the stipulated time, fixed time which was given. Like last final date is given to them to pay the money, and he didn't pay the money on the due date, so that becomes receivable. We are showing in the books of account as arrear money, and the entries for it I explained in my previous video with the help of example. Now in this video we are going to understand one more concept here, that is interest on calls in arrears. Now as the money is receivable from the shareholder, like shareholder have not paid the money on time, so what company does here? Company will charge interest on the shareholders. Now why company is charging interest on the shareholders for calls in arrears? So that all the shareholder will pay the money on time, and those shareholders who are not paying on time, it's a kind of a penalty, you can say that if you are not paying in time you will have to pay interest on it. And this is like a valid legal point. Now to make it a valid or to make it a legal point, company has to write this clause, this point in their one of the legal document called article of association. So you know this, what is article of association? So here in article of association we write all rules and regulation of the company. So in that document company must have to mention that company can collect interest on the arrear money, and how much they want to collect. If such situation arises in the future, even that percent of interest must be written in the article of association. Now students, it may happen that the company have not written or not mentioned anything about interest on arrear money in the article of association. Then not to worry students, here company will follow Companies Act 2013. Now what Companies Act 2013 have to say on this interest on call in arrear? As per the Companies Act, interest, company can charge interest up to 10%. This is as per Companies Act. So I explained you two rules students here. The first rule is company will have to follow article of association. In that they have to mention the point about interest on arrear with the rate of interest. Let's assume there is nothing mentioned in the article of association. Then what to do students? Then you have to follow Companies Act 2013. What the act says, that company can collect interest up to 10% on call in arrear money. I hope I am clear with the concept. Now let's discuss about the question in your exam. So when you read question in your exam and the question mentions the rate of interest on arrear, follow it, whatever interest they have given in the question. What if the question is silent? Question is asking you to pass journal entry for interest on arrear money, but question have not mentioned the rate of interest. Then what you will do students? You will follow Companies Act. What Companies Act says? 10%. So I want you to take a note of this. So just copy down whatever I am writing on the whiteboard. So what is interest on calls in arrears? How much you will charge students? As per Companies Act 2013, rate of interest is 10% per annum. Also time factor is important. Whenever you are calculating interest, time factor is important. It is per annum. So you also take time factor into consideration, like for how many months the shareholder have not paid the money. Accordingly you have to charge and calculate the interest. So this is, you will go for it whenever question is silent. So first you will follow article of association, whatever rate of interest is mentioned there, follow it. And if article of association is silent or not mentioned anything, then this is second rule. Companies Act. As per Companies Act, you will follow rate of interest as 10% per annum. So when to apply this? When the question is silent. Question is silent about the rate of interest. Then you follow the act and calculate 10% as interest on calls in arrears. I hope the concept is clear to you. Now, since it is charged to shareholders, we are charging this on shareholders. So if we are charging on shareholders, the interest money is receivable, and if we received it, it is an income for us. So this interest which we are charging on shareholders, can I say, student, this is my income? Yes, because we are also going to receive income from them, interest from them, and that income, that becomes an income for us. So what effect you will give as per the rule? Credit all incomes and gains. So income is always credited. Now you will ask me, in which entry you have to credit this? You have separate entries for it. To record this interest as an income, you have separate entries. You don't write it or you don't merge it along with the bank entry and transfer entry of your installments. You will write a separate entries for it. So I have already recorded these separate entries. I call these separate entries as master entries. So how many entries are possible for this interest on calls in arrears? There are 3 separate entries for it. I have labeled these entries. My first entry is a due entry. You can call it as receivable entry. I will show in my books that from shareholder this money is receivable. So they are my debtors. They are my debtors because interest is receivable. Debtors are my asset, debit effect. So sundry members will be debited. You don't write shareholders account, you write it as sundry members account because there might be more than one shareholder. So we don't list down the names. We write it as sundry members. So sundry members account debit, you will write down all the shareholders' name. Like suppose there are 6 shareholders who have not paid the money. So you have to add it and write the total arrear money over here. So sundry members account debit. So this is the total arrear money on which we have calculated interest. So you will write total interest here, not the individual entry you have to pass. You won't pass 6 entries because there are 6 shareholders. You have to club it together. That's the reason you don't write the name of the shareholder. You will write it as sundry members. Clear, students? Now, members are my debtors, money is receivable, it's an asset, asset always have debit effect, so I am debiting it to interest on call in arrear. Why I am crediting interest? Because interest is my income, so I am giving a credit effect. So sundry members is debited, interest is credited. This is your due ka entry. Received ka entry is very simple. Sundry members paid you a money, company is getting money. So bank account debit, debit what comes in. So bank account is debited, your bank balance is increasing, debit, and you will close this sundry members ka account. Why? Because they are no more debtors now. Here I shown them as my debtors. I received money from debtors, so close them. Don't continue to show sundry members as your debtors even after receiving the money. You have received your money, so close this account. So to close this, you will give opposite effect. Clear? Or else you can understand in a different way that sundry members are giver. Credit the giver. So sundry members are giver, credit effect, money is coming in debit, bank account debit. So whatever way you understood, this is the entry you will pass for received. Now what is the last entry, student? Closing entry. Now which entry to close here? This one. Interest on call in arrear account. Why we need to close this, student? Because this is your nominal account. And what we do at the end of the year, we close our nominal account. And we transfer all our nominal account to P&L. At the end of the year, we make a final account. And there we show all are nominal account. So you have to close this interest on call in arrear account. Now you have credited here and you want to close this account and transfer this to P&L. So what effect to give, students? Yes, you all are right. You will give debit effect. So when you give interest co debit effect, this account will get closed. So interest account is debited, this account gets closed to statement of P&L. Don't write P&L account. Why? This is company accounting, and in company accounting we never write P&L account. We write it as statement of profit and loss. So don't write it as P&L account, you will write it as statement of profit and loss. I hope you have understood your closing entry. You can also call this as transfer entry. Closing entry because I am closing this interest account. That's why I prefer to call this name by closing entry. Hope you have understood all the three master entries of interest on calls in arrears. Do take a note of this. Thank you, students.